Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Good day, good morning, good afternoon, everyone, and welcome to another busy day in the financial markets with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets before the opening bell. So buckle up, hit that subscribe button, and let's get started. Before we get started, I want to rest assure you that anything you hear and see during our live talk show does not represent investment advice nor a solicitation to buy or sell contracts for difference or cryptocurrencies. Financial instruments are complex products that carry high risk, so you better do your own analysis before making any investment decision. Here's what's happening in the markets today, 4th of August, 2021. One day after the US reinforced mask wearing for a number of states as the spike in infections continues, New York City introduced a vaccination mandate for all those looking to use indoor public spaces, the first of its kind in the history of the United States. A certificate of vaccination will be needed for all those working in or visiting indoor dining areas, gyms, theaters, and concert venues. This move comes a day after the Biden administration intervened to extend the ban on tenant evictions in most counties across the U.S. In China, meanwhile, the spread of the virus prompted more local shutdowns of public transportation, tourism, and entertainment venues, adding to concerns of an economic slowdown once again in the area. The U.S. stock markets seem to open mixed later on today after closing the trading session in the green yesterday, with the Dow Jones and the S&P 500 and the heavy tech Nasdaq moving as little as 0.1% before the opening bell today. And with pressure mounting at the top of the charts, the US indices might lead to another sell-off in the markets anytime. The euro tanked on the European trading session today after the services PMI data announced for the most European countries this morning came out in the red, showing again that Europe is still finding it difficult to recover this year. The US dollar index is trading in a narrow range today, marking very little gains ahead of the Fed press conference, where Richard Clarida, one of the most influential people from the Federal Reserve, will speak about the monetary policy. The ADP non-farm employment change dropped to 330,000 versus an expectation of 695,000 from consensus, sending the US dollar index to the downside ahead of the opening bell, putting even more pressure on the optimistic number of 880,000 jobs expected for the non-farm payroll on Friday. Cryptocurrencies also took a downturn overnight following an online conference where Gary Gensler, the head of Security and Exchange Commission, called on Congress to give him more powers to tackle rampant fraud, scams, and abuse in the cryptocurrency markets. With this being said, and the London hard fork delayed by 1 day, cryptocurrencies traded lower today, with Bitcoin falling shortly below the 38,000 mark and Ethereum falling below the $2,500 level. On the commodities markets, crude oil prices fell today as the virus spread in top consuming countries outweighed the fall in U.S. inventories and the tensions in the Middle East. Crude oil inventories in the U.S. fell by 879,000 barrels for the week ended July 30th, according to two market sources, citing figures from industry group American Petroleum Institute. Gasoline inventories fell by 5.8 million barrels and distillate stocks fell by 717,000 barrels, the data showed according to sources who spoke on the condition of anonymity. Crude oil traded today well below the $70 mark, falling as low as $69.19 ahead of the crude oil inventories data that will come out in about an hour from now. Elsewhere, gold futures rose shortly after the ADP non-farm employment change data was announced on the US dollar, gaining over $10 in a matter of minutes and trading at around $1,830 per ounce. And now my favorite line, guys, from Europe to South Africa, from Limassol to Cape Town and London. This is InstructFX News. US markets open, coming up.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Good day, good morning, good afternoon, everyone, once again, and thank you for joining us on this beautiful Wednesday. Today in the economic calendar, we have something that looks like a bloodbath, more than positive data, with the services PMI data from Europe coming out well below expectations from most countries and sending the euro in a downfall today. The ADP non-farm employment data did not impress either, coming out way below expectations at 330,000 jobs. Okay, announced 2 days ahead of the non-farm payroll data. Later on today, we're going to have the market composite PMI announced in 33 minutes from now. We're going to have the FOMC member Richard Clarida speaking in 48 minutes from now. And of course, the ISM non-manufacturing employment and the non-manufacturing PMI will be announced in less than 1 hour from now. At 5:30 GMT plus 3, we're going to have crude oil inventories and Cushing crude oil inventories, which are expected to come out at a negative 3.1 million barrels, versus the previous, which came out negative 4.08 million barrels. Tomorrow, we're going to have a super Thursday in the economic calendar with lots of announcements coming from the British pound, basically, from the United Kingdom. We're going to have the inflation report from Bank of England. We're going to have the interest rate decision, which is expected to remain unchanged at positive 0.10%. We're going to have the meeting minutes, which will probably create a bit of volatility on the pound. In the afternoon, just before the opening bell, we're going to have imports, exports on the US dollar, initial jobless claims, trade balance, and we're going to have the Federal Reserve member Walter holding a press conference again. So plenty of movement is expected on the economic calendar today and tomorrow. If we look at the earnings calendar, beautiful people, let's have a closer look now. We can see that a handful of high cap companies will report today. And some of them already reported. We see General Motors reporting earnings per share of $1.97 versus an expectation of $1.69. We're looking at revenue at $34.17 billion versus a forecast of $29.92. CVS Health Corporation surprised us with 2.42 earnings per share and 72.62 billion in terms of revenue. Still, we're going to have some big names reporting after the closing bell today, guys. And tomorrow, again, we're going to have a big day in the earnings calendar with Moderna reporting their earnings for the previous quarter. And we expect a forecast of $5.96 in terms of earnings per share. And in terms of revenue, we're looking at $4.21 billion. Now, considering that all vaccine providers rose their price in the past week or so in regards to the European Union, we might see a sharp rise in profit for Moderna. Right, who else is... We're going to have Glencore reporting tomorrow. Again, very interesting. Glencore, 0.21 cents in terms of earnings per share forecasted. Let's see what's going to happen. In terms of revenue, we're looking at Glencore possibly reporting $103.17 million. Okay, and as we get towards the bottom of the chart, we can see Viacom CBS reporting just under $1 in terms of earnings per share is forecasted $0.9653. And in terms of revenue, we're looking at a bit over $6.4 billion. Okay, we're gonna have other big names reporting. I'm not gonna bore you to death with all the names that will be reporting tomorrow. Now, let's move on to something a bit more interesting, let's say, and more for the crypto traders. Today is the 4th of August, and we were supposed to see the long-awaited London hard fork, on Ethereum. Well, guess what? That will be delayed until tomorrow. Sources reported. Overnight, we saw Ethereum and Bitcoin dropping. We see Ethereum falling 1% ahead of the major upgrade to Ethereum network. This was one of the headlines of the day. The other headline that confirmed what I was expecting came from Cointelegraph. And Cointelegraph said that Ethereum's London hard fork is expected to arrive on Thursday, ushering in EIP 1559, the long disputed protocol. Now, some analysts that decided to remain anonymous said that Ethereum might plunge dramatically after the London hard fork to lows under 1,700 US dollars, expert claims. Now, the expert decided to remain anonymous, so this says a lot about his or her expertise. Right, Ethereum price tanked over 1% last night, trading today at around $2,500, which is quite steady. I could say if we're going to look at the charts, we're going to see a pattern. Yeah, we're going to see that Ethereum held that price for quite some time. Ether has rallied ahead of the upgrade, though rising 40% in the past 15 days from a recent low. The token has more than tripled in value this year, outpacing Bitcoin, the world's largest cryptocurrency. This upgrade is supposed to happen when the 12,965,000 block on the blockchain has been verified. And according to sources, we might see it happening tomorrow. Pantera Capital Chief Executive Dan Moorhead told the Reuters Global Markets Forum this week that the changes will help Ether trade more like a fixed asset and make it more attractive as a store of wealth. On the other side, as I showed you a second ago, on the other side of the coin, literally, was express.co.uk, which reported today that a so-called expert stated that Ethereum will plunge dramatically after the hard fork to lows under 1,700 US dollars. Let's see what's going to happen. This is what I have to say about it. We're going to see we're only 24 hours ahead of the big and long awaited London hard fork. So if the price of Ethereum will tumble or will surge above $3,000 is only hours away. Now, we are about 20 minutes ahead of the opening bell, and today I want to talk about the latest changes and the largest changes in the FX market and how the big Forex firms are adapting to these changes. So stay tuned. I'm coming back in exactly 30 seconds with an incendiary interview about the latest trends in the Forex industry. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders. Recent studies show that the average conversion rate for a Forex landing page dropped from 5% in the recent years to only 2.3%. Along with the latest changes in global financial regulation, cryptocurrencies adoption, EFTs release, and more assets provided for traders, the Forex industry is also going through some well-deserved changes, I might say. These changes are meant to increase the productivity of the firms, prevent staff burnout, and offer easy, transparent solutions for the new clients. Now, for this, I've invited one of the specialists in artificial intelligence to join us today. So, ladies, gentlemen, traders, joining us live from one of the hottest places on earth, one of the pioneers in artificial intelligence for the financial sector, Dr. Jeje Gat, CEO at EBO Artificial Intelligence, entrepreneur, author, and public speaker. Jeje, thank you ever so much for joining us today. How are you, first of all? How are you handling the heat?
Thank you, Andrew. Thank you for having me on your show. We're very energized to be working in the FX sector. Well, the heat. I'm not a summer person. I tend to work much better in a cooler climate. But you know what? It's great to be on an island. It's great to have the sea all around you. And it's great to have strolls with the family and perhaps, an ice cream or a book in this type of climate.
And it's even better to have a big air conditioning next to you, isn't it?
True.
Right. Today we have a very interesting topic: the changes in the forex industry, and I'm very excited about this topic. As you know, and as everyone else knows, I've been on the front line of the forex floors for 10 long years. So I want to ask you, what are the latest trends, the latest changes that you've noticed in the industries, Jerzy?
Andrew, there are two. I think the first is that customer experience has become so front and central for FX companies. You'll agree that the digital journeys of our customers are the real differentiators, right, today. So those FX companies that can craft the touch points to make effective digital journeys will win over loyalty. And winning over loyalty translates directly into revenue and into bottom line. The second key trend is this idea of adopting technology in a lean way. Andrew, gone are the days where FX companies have months and years to realize the benefits of technology. We need short projects, easy to adopt, easy to roll out, and quick to provide return on investment. These are the key trends.
Yes, very nicely said. And also, if some CEOs will be a bit more open to adapt to the new trends, I'm sure the transition will be much smoother. Now, this being said, I know you're in contact with a lot of Forex firms on a daily basis. What are they struggling with the most, JJ? Because when I ask them, they don't want to tell me. What is it? Staff retention, client onboarding, client conversion? Which one is it?
Well, it's hard for most CEOs to admit, but I think the central issue is the burnout, right? We have customer service managers on the front line. We have HR managers. We have traders who are burnt out. They are tired from the relentless cycle of hiring new staff, passing on the knowledge, retention, replacement, and start again. I think that this model is intrinsically broken. Right? So we see customer service team members on the front line who have an FX client orientation that feel the need for relief. They feel the need that they need to compete in a complex market, but don't have the right tools. I think the second biggest challenge that we hear from CEOs is the concept of using data. So we know that FX companies capture a lot of data, right? But very often it becomes dusty. It remains in some type of CRM. How do you operationalize that data, Andrew? How do you bring it to the front line? How can you in real time change the tone, the pulse, the trajectory of an interaction with the customer based on the siloed data? So these two areas, burnout relief and data, is what CEOs complain most to us about.
Yes, I'm with you on both when it comes to burnout and also when it comes to data. How could they adapt to the new market trends? What do clients, for example, expect from a trade firm nowadays?
That's such a good question, Andrew. I think it all starts off with this concept of automation, which is a principle that artificial intelligence is ushering in, right? So by using the latest automation tools, we can essentially reframe the notion of work. What does it mean to work in the FX sector today? So we can automate entire processes which are typically repetitive. Think of frontline customer service, onboarding, KYC, AML procedures, and subsequently we can allow our human employees to focus on the FX challenges that really matter, right? That's where you need emotional intelligence, that's where you need human intelligence. I think the second way to adapt is to realize the cost competitiveness of the FX world today. It is the survival of the fittest. I think what this means in business terms is that we need to have lean structures. If an FX company cannot control its payroll, cannot control its process cost, then they're going to be in hot water.
Yes, fair enough. Now, I know you're one of the pioneers in artificial intelligence. So let's take it one by one and see how artificial intelligence can help the clients and the firms in the same time. So let's start with a client, a newcomer that doesn't have much knowledge about trading, but has the will to participate on the markets. How could artificial intelligence make their journey smooth and exciting in the same time?
Well, first of all, 24/7 service. We still have a reality whereby most FX companies are not there to handhold their customers on a personal basis through the 24 hours of the day. I think that is a critically important change that AI brings in. The second is this concept of creating an omni-channel environment. So the customer coming into the FX market has no sense that this process needs to happen purely on a website. What if it happens on a messaging platform? What if it happens on email? There needs to be an AI-driven approach which brings all these channels which society has accepted into one trading platform, into one simple experience. Another advantage which AI can bring in to the customer coming in for the first time is the concept of language and localization. Meaning today, through AI, we support about 85 languages. Which FX company is actually serving a customer in 85 languages? This should be FX on the customer's time and language and culture, and not the companies. And lastly, using data points, right? So when we get new customers coming into a platform, we want to assist or respond or even predict what they are likely to do next based on data which we see from similar customer cohorts. So it's all about the FX company being able to take the most relevant action, often predict the most relevant action to support the new customer coming into the business.
Right. Are we talking about chatbots? Because I know most companies have implemented chatbots, JJ.
No, I think we should be talking about virtual agents. So chatbots are a slightly more immature legacy product of artificial intelligence. We are talking about a cognitively capable virtual agent, which is almost indistinguishable from human brain, who can handle compliance, who can handle consistency over time, and which creates a differentiator in the market. So by adopting virtual agents, the AI capabilities are increased.
Right. Question though, does this mean that the human interaction will be forgotten 100% in the Forex firms?
And I think in general, the scope of artificial intelligence is not to replace humans, but to augment human capability. Men and machines are essentially good at very, very different things. People, Andrew, you and I, we have intentionality, we have creativity, we can make plans, we can figure out complicated solutions, but we are less good at making sense of huge amounts of data. But that is where machines, that is where AI comes in. It's not trying to replace that human agency, but it can excel at efficient data processing, at 24/7 consistency, right? It will struggle to make basic human judgments, but it could be very, very, very good for factual, repetitive consistency.
I love the word repetitive, not, as that is basically the work of an account manager. Right. Now, let's talk about the how artificial intelligence can help the firm and, most importantly, the workers in the front line, because that's where the most pressure is, on the sales floor. Yeah, and one of the most important parts in this job is the agent burnout. Yeah. I felt it, my colleagues felt it, and this is probably one of the hardest parts in being an account manager in the trading industry, because you get burned out at some point, as it's one of the most stressful jobs. And as you said, it's a repetitive job. Yeah, as I was saying in one of my interviews. So how can the artificial intelligence help the agent prevent the agent burnout by using a chatbot? Again,
of course, you're right, Andrew. Of course, you felt the burnout. So the first thing a virtual agent can do is increase the efficiency, because the task load is not 100% on the human payroll, but gets distributed to a workforce which is part artificial intelligence and part human. And in a 24/7, always on market, the expectations of our customers are much higher than they were 10 years ago, Andrew. So we need to ensure that our processes can match that level of expectation. So how does a virtual agent, how does AI help the company? Well, it lowers the operating cost, right? It reduces recruitment costs. It reduces the pain which is related to burnout. And I think in the FX segment specifically, we have seen these three key advantages. First, the reduction in customer attrition. If you manage the customer touch point well, you should have more loyalty and you should have less attrition. Secondly, we have seen an increase in customer satisfaction, right? Because there's a better duty of care towards the user. And lastly, and perhaps most importantly from a regulatory point of view, what we've seen is better compliance level because human bias is reduced. And that is one of the key advantages that AI can bring.
Right, fair enough. And now I have more questions about this topic because I'm one of the old school guys. Yeah, when I started in the financial markets, we had a pen and the paper to work with, and that was it. How can the artificial intelligence help the company finally? Because you know how it goes. The CEOs tend to care more about numbers and the overall image than individuals. So let's take marketing, for example. After sales, marketing is the core of the business, as without exposure, you basically don't get clients. How can the artificial intelligence help increase client conversion and reduce marketing cost, let's say?
Right. So you mentioned CEOs are interested in numbers, but you know what? The two are not intrinsically separate. I would say they're very related, right? So economic success, which is CEO measured, staff well-being, customer experience, they're all facets of the same business challenge. And Andrew, do you know that 94% of FX customers say that they are annoyed by the communication and present engagement patterns with FX companies? I'm sure this doesn't surprise you, does it?
Yeah, I also know that many times, like about 70% of clients lose on the financial markets.
Exactly, right? So how can we prevent that? And which are these benefits that AI can bring to the company? Well, first of all, speed, right? There is no waiting time. There is no queue. There is no, we are not available for the next 8 hours. Speak to us in the morning. This is a 24/7, always on, speedy, multi-platform structure, solution. Secondly, it's taking out the repetitive querying from the frontliners, right? So AI is much better at customer identification, which are the right customers for the right type of trading activities. AI is much better at listening, right? Because it could read so many data points, which humans typically can't capture, like sentiment, right? AI is much better at taking unbiased assessments about customers, right? There's no concept of fatigue at the end of a shift, which often occurs, right? And also AI is much better at pattern recognition, which is so important for marketing, which you touched on, Andrew, right? It gives traders proactive guidance by looking at all those different market signals in real time, which could be relevant to a customer from a particular cohort. And that's a beautiful recipe for marketing.
Fair enough, fair enough. But I do have another question, and it's important, and I'll tell you why. Will the use of artificial intelligence reduce the number of employees? Because human interaction can't really be replaced by any machine. Yeah. For example, many traders come to the markets with wrong expectations, or wrong understanding of the markets. And part of the account manager's job is also to try and educate the client in terms of expectations and help them mitigate the risk as much as they can. How can AI replace the human factor to that extent, Jeje?
So it's interesting to note that the World Economic Forum said that by 2025, AI will create 97 million jobs, right? Data analysts, data scientists, machine learning specialists, and so on. But because of these roles, the general global economy will lose 85 million jobs, which are typically clerks administration secretaries and repetitive process roles. But obviously, there is a net gain. So AI is actually not reducing the workforce, but it is creating opportunities for a larger workforce, which is even more specialized. Now, Andrew, you asked this question about empathy, about emotion, about handling difficult moments which often occur on the trading floor. So what you're really talking about here is intuition, consciousness, creativity, empathy. These are a very specific type of intelligence. Now, let's be clear. If intelligence means consciousness, empathy, then AI cannot deliver that. That is still the frontier of the human being. But if intelligence is expected to mean computation, algorithmic calculation, then there's no reason to believe that AI can't be as intelligent, if not more intelligent than human beings. And the gap, which I believe there is now between AI and humans, can never be shortened, can never be surpassed. However, from a business point of view, we need to focus on the 80-20 rule, Andrew, the Pareto principle, right? So what effort can a company do with AI today to solve 80% of the repetitive problems that it has? Very often, the areas which require emotional intelligence, that's the 20%. Leave humans do it. But the part which you could solve to bring back results, then do that today.
Fair enough. And how do you deal with those CEOs or those sales managers that live under the impression that if the staff takes 5 minutes, or reads an article, is not producing?
Right. I think this is a culture thing, right? The beautiful thing about digital transformation, Andrew, is that it's not about technology. It's always about culture. It's about changing these perspectives about work, about employees, about efficiency, and moving to a more agile and modern world where we don't measure time, like you mentioned, but we measure outcomes, we measure effectiveness, we measure goals.
Yeah, and it makes a lot of sense. Right. One last question, though, okay, which is the most complicated question of them all. As an account manager in a Forex firm, you have a portfolio of clients, a database, which you stay in contact with on a daily basis, or very often, from a couple of times a week to 3 times a day in some cases. And inevitably, you create a bond with your client. So my question is, when the time comes to call your client and inform him or her that unfortunately, due to situations out of anyone's control or a mistake on their side, they lost $250,000. Okay, and they start crying over the phone and they tell you, that was my child's tuition fund. That was the college funds. And you got to be there. Yeah, as you said, you got to empathize with him. You got to be there for them. You can also tell them personal stories, because we all traded in the financial markets at least a few times. Yeah, the ones that work in the industry. So you can empathize with the client. You can tell him he's not alone, and it's gonna happen time to time, and you shouldn't get discouraged. How can the artificial intelligence handle that part, Jeje? And would the client talk to Siri about it, or he would prefer to talk to a human?
Andrew, Hollywood depicts artificial intelligence in a very dystopian fashion. Usually there are 2 models, right? It depicts AI as a sort of Terminator, robots are coming here to take over the world, or it tends to romanticize this figure of AI, right? Like in the Ex Machina movie. The truth is more pragmatic, more simple, and somewhere more in the middle ground of this very strange depiction, right? AI will never be sufficiently empathetic with the customer to tell him or her that they've lost their pension or their tuition funds for their kids, but it is sufficiently capable of answering questions around, why deposits have not gone through or why a KYC process has not occurred, right? So the former, when you're telling your customer they've lost $500,000, should be happening in 1% of the time. But the latter, the questions about KYC, the questions about deposits, the questions about transaction, that happens 90% of the time. AI should be focused on handling that 90% and never that 1%, because humans are much better at that, and that's how it should be.
Right. Okay. Fair enough. Thank you so much for today. You did answer indeed to some questions I had about artificial intelligence, and I told you at the beginning when it comes to forex and sales floors and trading firms, I do strongly believe you need more humans than machines. But as you mentioned a second ago, a machine can do the repetitive job, leaving the agents with their mind focused on the real things that they should do. Amazing interview today, JJ. Thank you ever so much for being with us today. You've opened my eyes and hopefully other people's eyes regarding artificial intelligence. And I'm looking forward to the next one, or why not, a series.
Thank you, Andrew. It was a pleasure being here.
Thank you for being with us today, JJ. Have a good one, and I'll see you soon. Right, ladies, gentlemen, traders, we had the pioneer in artificial intelligence, Dr. JJ Gat, with us. We're going to take 30 minutes break, and we're going to come back with the charts of the day and the signals of the day as we are a few minutes into the US trading session. Stay tuned. We're coming back live in exactly 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, we're exactly 8 minutes into the US trading session. Let's have a quick look at the charts and see how the most traded assets perform today. Once I take my headset off, there we go. That was supposed to happen during the adverts, but there you go. So we're looking at crude oil WTI trading at $68.27, 8 minutes into the US trading session. We saw crude oil WTI falling sharply on the European trading session today, just 1 hour ahead of the US crude oil inventories. Let's see what's happening with the euro, which surprisingly gained today on the European trading session, currently trading at 118.94 versus the US dollar. We can see a bit of a range happening there on a 1 hour chart, and we can see the euro trying to break a bit higher, okay, on the back of a weaker dollar. But with the services PMI data that came out this morning from the European Union, and it came out all in red, yeah, then we might see the euro pushing a bit lower on the US trading session. But let's see what is happening with the US dollar, because that's where the fight is happening. The pound is trading to the upside with little gains on the European trading session, 139.53 for the pound this afternoon, with RSI stochastic pointing upwards. We might see the British pound retargeting that 139.80 level, which is about 25 basis points higher than the current market price. USD JPY is trading to the downside today. If you remember, only a couple of days ago, we saw the USD JPY pair trading at 110 or above 110. 108.75 is the market price today, with RSI stochastic pointing downwards and touching the oversold levels. A lot of weakness for the US dollar. The Aussie dollar, in contrast, is pushing higher on the back of a weaker US dollar. 0.7422 for the Aussie dollar versus the US dollar today, again with RSI stochastic pointing upwards and indicating a bit of positivity for the Aussie dollar as well as for the European currencies. USD CAD pair traded a bit higher today, just a tad higher, but nothing substantially happened before the opening bell. 125.46 for USD CAD. We had some announcements in the economy calendar, and that's why the USD CAD pair tends to stagnate a bit. Okay, at 125.42, 125.46. We see a bit of accumulation happening there by the last three candlesticks in the last 3 hours. Yes, so this seems that the price action is settling a bit higher, above an important support level. So we might see the USD CAD trading a bit higher today and recovering after this big sell-off that happened on the 21st this month. Let's see what happened with the S&P 500 and the Dow Jones, guys, which opened to the downside today. We see a triple top form there. As I was telling you yesterday, I personally find it very difficult looking at the charts. Yeah, to believe that the S&P 500 and the Dow Jones will rally even further, reaching record highs once again. But what do you know? The earnings calendar and the earnings season is still ongoing, so we might see the S&P and the Dow trading higher at any point. Until then, triple top up there. We see a negative opening for the S&P today. 4407.90 current market price, with the RSI stochastic pointing to the downside. Dow Jones opened aggressively to the downside as well after a quadruple top. I might say 34,909.70 for the Dow Jones Industrial Average this afternoon, with the RSI stochastic once again pointing to the downside, and indicating a big sell-off that might be just around the corner. Let's have a quick look at the US dollar index, which fell out of this ranging channel that we saw earlier on, currently trading at 91,852, again with the RSI stochastic pointing downwards. Big shake-off for the US dollar index futures after the ADP non-farm employment data came out. Gold futures, on the other hand, are pushing to the upside, with gold trading at $1,835 on the dot as we speak, with both RSI stochastic pointing upwards. And if we zoom out a bit, we can see that gold entered a slow but certain, I'd say, at least from the technical point of view, uptrend. Yeah, gold has managed to recover over 70% of this drop that happened on the 16th of June, at midday. Okay, where gold futures fell from 1,859.75, all the way down to 1,761.53. Okay, so overall, we see gold pushing to the upside slowly but surely. Let's see if it's going to break this level, because apparently we're at an important resistance level for gold futures today. Then we might see gold trading even higher, and retargeting that $1,860, $1,870 mark. Right, silver is also trading to the upside, again recovering about 70% of the losses it had on the 16th of July after a sell-off happened. Okay, we see silver futures trading at 26.03 as we speak, with RSI stochastic pointing upwards. If that's the case, then probably traders will eye for this level, okay, at 26.58 for the first take profit level. But first, probably we need a confirmation from this resistance level at 26.05, 26.03. That silver futures are looking to push to the upside. Once that breakout happens, then probably traders will eye for 26.58 as their first take profit. Right, let's see what's happening with Tesla after the US markets open. We see Tesla trading to the upside today, $714.14 for Tesla, with RSI stochastic again pointing upwards. I'm very curious to see what stunt Elon Musk and Tesla will pull this time to push the price even higher. Bitcoin, guys, tanked after it took a beating overnight from the Security and Exchange Commission. We saw the head of the Security and Exchange Commission, Gary Gensler, participating at an online event yesterday, and he requested yet more power over cryptocurrencies from the Senate, to tackle money laundering, and illegal activities. After that, we see Bitcoin recovering a bit today, trading at $39,172. Once again, pushing higher towards that $40,000 mark that we got so used to by now. Ethereum is also pushing to the upside. Very good gains for Ethereum, and this only happened in the last 10 minutes or so, guys, since the US markets opened. Before the US markets opened, we saw Ethereum trading somewhere there around the $2,507, $2,510, $15. And look what happened shortly after the US markets opened. $2,617 for Ethereum. With again both indicators pointing to the upside. Right, Ethereum seems to be having an interesting resistance level somewhere there around the 2,650 mark. We're waiting for that level to be broken to the upside, and if that's the case, then the winning streak for Ethereum might continue. Now, once again, we saw the headlines of the day reporting that Ethereum fell 1% ahead of major upgrade to Ethereum network. We saw Cointelegraph reporting that Ethereum London fork is delayed by 1 day. Yeah, it's expected to arrive tomorrow, ushering the EIP 1559 protocol, and also some analysts which decided to remain anonymous said that Ethereum will plunge dramatically after the London hard fork to lows of under $1,700. Right, if that's the case or not, only time will show us, guys. Now let's have a quick look at some trading signals provided by investing.com. And by the way, if you're looking for more trading signals straight on your trading platform, check out markets.com. They have an amazing web trading platform where they display the trading signals and the source directly on the platform. Now, let's have a look at the trading signals provided by investing.com today, guys. After the opening bell, we're looking at the euro and the pound with 4 strong buy indications versus the US dollar. USD JPY, USD CHF indicate 4 strong sell all across the board. Aussie dollar is following the European currencies to the upside with 3 strong buy indications. The euro versus the pound, it seems to be strengthening as well, but the daily remains a strong sell, so very careful on that one if you're planning to trade it mid-term or long-term. And as we get towards the bottom of the chart, we can see the QE dollar strengthening with 4 buy indications versus the US dollar, the euro weakening a bit versus the JPY, and the pound also weakening versus the JPY and the Swiss franc. On the commodity side of things, let's have a quick look and see how the commodities markets will move today based on the signals provided by investing.com. So don't follow the signals blindly, guys. Do your own analysis. Gold and silver, strong buy all over the board on all 4 time frames. Copper, a bit of mixed signals indicating more sell than a buy, with sell on a 1 hour chart, sell on a 15-minute chart, strong sell on a 1 hour chart, and the daily indicating a sell as well. Crude oil, WTI, and Brent oil point to the downside after the opening bell with 4 strong sell indications for crude oil and Brent oil. Natural gas is gaining, trading above $4.14, and US wheat seems to be pulling back a bit shortly into the US trading session with a shy sell signal on a 5-minute chart, followed by 3 strong buy indications. Right, this is it, guys. This is what's happening on the markets today. Join me again tomorrow, same time, same place, for a new round of market talks. And until then, remember to trade responsibly and may all your trades be in the money. This video was sponsored by markets.com.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.